South Africa doesn't so much have a payments problem as a political will problem. Well, that was certainly until recently, and also until you remember that payments actually are the economy. They're the rails under every wage, every taxi fare, every spaza sale, every online subscription, every SME invoice. And if those rails are slow and expensive and fragmented or closed, innovation gets throttled and financial inclusion remains elusive. Welcome to the Monocle Banking Podcast, proudly brought to you by Monocle Solutions. Now, this year's budget contains a rather big signal. Treasury says that our payments landscape is entering a pivotal new chapter through the Payments Ecosystem Modernization Program, or PEM. It's anchored by the transition of Pay Inc., which was formerly BankServe Africa, into a national payments utility. I think the language really matters here. Open, shared digital payments infrastructure, interoperability, and a platform intended to serve as the backbone for both high-value and retail payments. But the other big piece is regulatory. We've got an activity-based model and new licensing that is explicitly designed to allow non-banks, fintechs to participate directly in payment activities like e-money issuance and acquiring, with implementation slated for the second half of 2026. So what does all of this actually mean in practice? Will it lower costs? And will it actually deliver in terms of improving speed and reliability and, crucially, moving the needle on financial inclusion and SME growth? Well, to unpack that, I'm joined this week by Marin Cundall, Managing Executive Identity, Customer and Payments at GoTyme Bank, for a deep dive into what Pay Inc. and PEM could mean for the future of payments. Marin, welcome. You actually started out with a PPE, a Politics, Philosophy, Economics from UCT, before spending several years at SnapScan, which was really one of the early forerunners in the mobile payment space. I guess a PPE equips you to really understand the importance of the societal mission of financial inclusion. But just take me back to your earlier career and how you came to find yourself in payments after studying at UCT.
Thanks, Michael, and thanks for having me on. Yeah, so for a long time, I've actually always referred to my undergraduate degree in PPE as a politics, philosophy, and economics, as not related to what I do, but actually the deeper I get into my career, I realize more and more that it's very centrally related to what I do, especially at the moment. So yeah, I was studying deep into postgraduates, wanting to go and change the world, work at the United Nations and drive climate change policy reform for developing countries. And I got the opportunity to work with the South African delegation at the climate conferences a few times and kind of realized that my brain needed to work in maybe a slightly more fast-paced environment, which is when I fortuitously got the opportunity to join SnapScan in Cape Town when they were just, about a year old. And a friend I'd studied with said, if you want to make some extra money, come join here. And it's really smart people doing really cool things. And very quickly, I got hooked on the kind of impact that financial technology can have in South Africa and the environment of fintechs that are driving impact directly. So that led me to stay there for a number of years and saw the impact that innovation in payments technology can have in South Africa. And when I got the opportunity to join GoTyme Bank, it has a very similar fintech environment, but just that impact is now at a much bigger scale, which is something I appreciate about what I get to do.
Yeah, it really is impact at scale. I want to come back to your realization that PPE is actually central to what you do. What was that moment that made you realize, actually what I've studied really equips me quite well to understand this huge transition that is happening all over the world as the old, boring, dumb pipes of our payment system, which are really the arteries of the modern economy and the way we trade and grow businesses and deepen financial inclusion. What was that moment for you that made you really realize, actually, I'm on the right path?
Yeah, so I think it's this kind of exciting moment we're in now as a country with this opportunity to really drive payments modernization in South Africa and seeing that it is an outcome of political will and political economic will in particular. And so understanding those dynamics and how important it is to deal with incentives in order to ensure that that progress happens. You can't just come up with a good idea. You actually have to deal with how things get done in the political economy. And then also, how do you do it ethically? That's where the philosophy comes in. So definitely deploying it on a day-to-day basis. At the moment, I think that's why the budget speech was such a valuable opportunity to highlight this. It shows that political will is there to support payments modernization, which I think is going to have a massive impact on the South African economy.
I actually think we can't overplay just how significant that philosophical shift was in this budget, not just in the signaling around payments, but the understanding from the fiscus and treasury that we have to deepen our savings pools in the country, and in so doing, upping limits on tax-free savings and investment accounts, RA, single discretionary allowances, which some might say might only benefit high-income earners, but I think philosophically indicates that Treasury understands we need to deepen our savings for South Africa to grow more broadly. Marin, before we dive into the reforms, maybe let's just start with the plumbing of the system. If I tap my card, or if I tap my phone, or if I send an EFT or make any kind of instant payment today, what actually happens behind the scenes? Who touches that payment between initiation and settlement?
Yeah, so I mean, there are, on the card side, that's really governed by the card schemes directly. So the Visas and the MasterCards of the world, and all of the participants in the payments ecosystem right now, the banks specifically, have direct relationships with those card schemes. And when it comes to non-card payments, so digital payments, those are all, we call them rails in the industry, to move money from one place to another place, from bank to bank. And what we've had traditionally is these kind of older rails, the electronic funds transfer rail. More recent history is the real-time clearing rail. And those are, essentially integrations that exist between banks and the central bank to move money from one place to another place. And what we have now, the payments modernization that we're talking about now, is largely focused on the rapid payments rail, which is a brand new rail that was established, on which products like PayShap live. And that is a much more modern rail, much more secure rail, a much more reliable rail that moves money within 10 seconds from bank to bank.
And, I remember in the early days of SPAs, historically, the South African payment system was just bank-centric, as you say, and fintechs had to access the system through system participant arrangement, or SPAs. And you had to jump through all kinds of hoops as well. Let's come to where we are today, because as you mentioned, there's RPP. It's been well signaled to the market that this is the direction we're heading in. And Treasury's budget review uses unusually direct language. As you said earlier, it's very, very important to look at the language, paying transitioning into a national payments utility, and it being, and I'm quoting here, the main platform for high value and retail transactions. What is paying becoming, and what kind of problem is it trying to solve as it transitions from the old BankServe Africa into this payment utility?
Yeah, so maybe just some context on this payment ecosystem modernization journey. So
Yes.
that was established, or the formal position on that was put out by the Reserve Bank in around 2015. And they had Vision 2025, which was kind of painting the picture of the payments modernization journey. And so the rapid payments rail really came out of that vision and mission. And so that technology was established. And then the banks, as a collection of banks that form BankServe Africa through direct ownership and through participation, then built the PayShap product on that rail. And so that's the kind of instant payments experience. When we talk about instant payments in South Africa today, we're talking about PayShap, which is this product that was developed by the banks on this rapid payments rail. And so what's happening now is there's been excellent work done by the banks to establish this technology, this capability, this product. And now the Reserve Bank kind of coming in again at the end tail of this, it's 2026, it was Vision 2025. Did they deliver it or not? And they're kind of saying, we've got the foundation in place and we're in an excellent position now to take it to the full vision, which is now Vision 2030, and actually deliver the true interoperable promise of this ecosystem. And so the opportunity of PayShap and the idea of what it's meant to be for the South African customer and business is a way to move money instantly, so within 10 seconds, 24/7, so not constrained by shut-off periods. And it's meant to be as easy and as interoperable and as seamless as sending an SMS.
Yeah.
So the idea is that you can send directly to a cell phone number or to an account number, but that it is consistently reliable, that the money will move, that you'll be able to make that payment, and that there is complete adoption of it across consumer and business.
And I think that term interoperability is important because as consumers, we often look at the payment rails, as you call them, and as the industry refers to them, as being somewhat antiquated in a world where everything's become digitized and you can access most services almost 24/7 on your cell phone. Banking for a long time has really been ones and zeros if you think about it, and we've been moving away from cash, although I don't want to go down that rabbit hole. I know in South Africa, Treasury and the Reserve Bank released a paper almost a year ago now saying that still more than 50% of transactions are taking place in cash, and we'll come to that. But when it comes to open loop versus closed loop ecosystems, Treasury explicitly emphasizes an open shared infrastructure and interoperability across various payment providers. So, where do you see the fragmentation today, and what does interoperability unlock?
Yeah, so I think, I mean, it actually isn't, it's very closely related to the cash question as well, because there are a few objectives of PayShap and how it will, impact the economy positively. One of them is just speeding up the movement of money that's normally done through digital channels or card schemes, etc. And that we can speak to, some examples of how that has a very direct economic benefit that we can measure. And then the other one is that it should be as usable as cash. So as reliable as, if I have 100 Rand and I want to give it to you in cash, I know that I can just put my arm out and give it to you. The interoperability of PayShap needs to feel the same. It needs to feel like I know for sure that when I push the 100 Rand from my account to your account, it will arrive with you instantly. And so that interoperability question impacts whether it has the opportunity to act as a decashing vehicle as well as a multiplier to move money through the economy faster and safer. And so what we see with the open loop kind of experience of PayShap is that's how it's intended to function. And there is some work that needs to be done on making sure that there is consistency in exactly how customers experience using PayShap. But what we see is this kind of tendency or this establishment to date of the closed loop systems, which is when one bank has the relationship with the business and the customer, and that's the only way that a payment can happen. And so that just creates, different experiences, different limit structures, different fees that are charged. And it's not something that a small business can just access one payment offering like PayShap and offer it to all banking customers or customers who have bank accounts. They actually need to have direct relationships with each provider in order to access all of the consumers.
And I think that's a great explanation there. So when it comes to the economics of this and cost, I know when PayShap was first introduced, there was an uproar in the market in that in other markets where we've seen extremely successful and rapid uptakes of this new digital payment rail, cost has been close to zero or zero. I mean, if you look at Brazil, if you look at other markets like India as well, whereas in South Africa, there were a few banks introduced zero cost. Others said, well, below a certain amount. And now we've seen almost a sliding scale up. What do the economics look like? And how do we get to a point where, costs are as close to zero as possible in order to shift more people onto digital over cash? Because that unlocks all kinds of things. If you're an SME transacting digitally, you're a thin file customer, all of a sudden a bank can see all the flows, all the cash flow through your business. You can start lending to that business. You can provide working capital. You can, help unlock further inventory and stock management. They're all kinds of incredible things we can do, but we need to get more people onto these rails.
Yeah, so that's exactly, I mean, GoTyme Bank's position from very early on in the PayShap regime has been to offer, low value transactions for free, to make it as easy to understand as possible. So that's one position that we've taken for a long time. And that's exactly that the issue of interoperability is there cannot be a heavily fractured application of fees, some much higher, some much lower, different limits. That's all friction to customers feeling like they know what's going to happen when they try and make a payment. The same way they know when they hand the 100 Rand to you, you get the full 100 Rand. There needs to be no confusion and no uncertainty in that process of exactly what I'll be charged, what the other person will be charged, and critically also that when I try and make that payment to their cell phone number or their account, that it will go through. So those are things that are foundational for interoperability. Fees are very much part of that conversation. If I'm going to purchase from a small business who's selling coffee and I get charged 5 Rand to make a PayShap payment, of course I'm not going to use that. I'm going to insist that they take my card payment or they take my cash. So that's absolutely where you get the network effects beginning, is if you reduce the barrier to, understanding what this is going to cost me, then people will take it up much, much faster.
Absolutely, and then you start to see all of those benefits flow through. So where are we currently when you look at moving towards full interoperability? Where would you say we are on that journey?
Like I was saying, the core payment experience on PayShap of when a customer is able to make a payment, it goes through, it's very reliable. We've proven that it works extremely well for that. Where it comes now to making sure that interoperability is truly delivering on the promise of what PayShap needs to be, is there needs to be consistency in the limits that are provided by the different participants. There needs to be consistency or transparency, at least, in the fees that are charged or not charged in transactions. And so that's something that we look at as GoTyme Bank with our new app that we've just launched. Something I was the most excited about was our new payments journey, which actually helps the customer find the instant and free option as quickly as possible. So we help take them on that journey. All you have to do is decide if you want to pay to an account number or a cell phone number. And then we help make sure that you land on the instant and free option. If you're paying below 5,000 Rand, there will always be an instant and free option available to you. So that's just one way of, in the actual product design, you can make the experience as trust building as possible so that they'll come back and use it again. And so absolutely your point on other countries that have these instant payment systems, they tend towards costing nothing for customers specifically, is because that's the only way that really that you can get the full scale adoption on the customer side. And the job then is making sure the experience is really great so that they keep coming back to you.
And I was going to come back to you on that point because, Marin, I get the sense, and just with my own bank, that there isn't a great deal of effort nudging me into that particular rail. Is it because banks are still trying to protect existing profit pools in this space? Because ultimately, if you're now moving something for free that you used to be paying a small percentage or margin on, that's going to come out of a profit pool somewhere.
Yeah, I mean, I think, to be frank, there's definitely some inertia in the market from these kind of legacy income streams that exist. The idea that you can just give those away overnight because you want to create a cool payments experience, it's trickier for different financial institutions. But I think there's a short-sightedness there of what the opportunity actually can be. And I think one is just the reality, again, to your point of the other country examples, is this will tend towards zero. This should tend towards zero cost or very low cost for customers. And so it's almost an inevitability that we need to get on board with and decide and understand that when there are more transactions coming through the digital economy, that is actually good for business and it's good for our customer relationships with our customers.
Yeah.
And we need to be driving value around the payment experience instead of extracting fees from the payments themselves.
I couldn't agree with you more because if you're, let's call them a legacy bank listening, and you're worried about protecting marginal profit pools somewhere, then you might be losing customer stickiness because you're not showing that responsiveness or speed of innovation that competitors are. And so it really is a very short-term approach that one is taking. I want to come to GoTyme now, and you've shown phenomenal growth. You've just launched the app, the vanguard of the wave of digital first banking growth in South Africa. How do open rails change the strategic playbook for a digitally native bank like GoTyme?
Yeah, I mean, we're extremely excited about the prospect of open payments in South Africa. And we, on the retail bank side with our kind of consumer and customer offering, we do the excellent zero cost instant payment journey, but we also have key relationships on we call it the enterprise side of the business with third-party payment providers who, South Africa has a really strong bench of third-party payment providers and fintechs that offer really key payments infrastructure throughout the whole of the South African ecosystem, especially the online and e-commerce ecosystem. And so we work very closely with those third-party payment providers to make sure that they're also able to distribute this instant payment system to all of their companies that they work with, the big e-commerce companies, etc. So that's two ways in which we're trying to get, not just the customer experience to be excellent, but also for there to be a really broad acceptance network for these payments to flow through.
Marin, I've got to ask you, before anyone can open an account or send money or even access a digital wallet, the system first has to answer one very fundamental question. Who are you? Because obviously banks are highly regulated. There's anti-money laundering and AML, all of those things. We thankfully just recently got off the FATF grey list, so we need to be very vigilant here. But recently we saw a very public dispute between digital banks like Time and Home Affairs over that sharp increase in ID verification lookup fees against the National Population Register. How central is digital identity verification to the economics of modern banking and payments? And does a jump from a few cents per lookup to several rand fundamentally change the viability of onboarding low-income customers?
So I think we've done a lot of work since then to really optimize how we're using that service directly. And we have a really robust identity verification capability that allows us to do this, branchless banking, 100% remote onboarding within 5 minutes. Whilst that was a, supply shock in terms of pricing, we were able to adapt to it really quickly. And we've been able to also just look at other areas in which we can continue to service, or ways in which we can continue to service the lower income customers, whilst keeping them commercially viable customers to serve. I think the difference, especially for us as a digital bank compared to the legacy banks, is our cost to operate is much, much lower. And so we can take some of these hits and still build really commercially viable banking relationships with low income customers. And what we offer kind of scales from low income customer products. It's the same product you'll get as a low income customer, if you want to classify it that way, all the way to, middle and upper income customers. It's the same value that we offer. And so we're not discriminating against different areas of the market as a result of that price change.
I must say, when the minister did come out and make this argument that the banks and fintechs have been benefiting from an underpriced state service, it didn't make sense for me, because the broader policy question for a government that is trying to drive financial inclusion and certainly move people from cash to digital services should be to say, well, how do we do this, and what role should government play in terms of building out a digital identity ecosystem in South Africa? But to your point, sometimes policy shocks force innovation, and very interesting to see how quickly you've been able to adapt. And unsurprising, Kun Jonker, your founder, was on a panel with me at the Beyond Banking conference at Gibbs a couple of years ago, and I was amazed, at the cost to onboard a new customer. I mean, it was a fraction of what the incumbent banks spend. And so you have that ability, but I think there is a broader question here that, if payments are the rails of the digital economy, then identity is the ticket that really lets you board the train. And I just still think we're in danger of making that ticket too expensive for the very people we're trying to include. But I digress a little bit. As we get to the end of our time here, Marin, what do you see as the big opportunity for SMEs as we move into the PEM economy, let's call it?
Just to quickly go back to the digital identity point before we move on, I think what the DHA and the government focus is now is the correct focus. So there is a lot of investment happening into the digital identity space. And some of the work, aside from the cost for that specific service, the work that the DHA and the government are doing on broadening the inclusion of the population into the digital identity infrastructure that does exist and building on that is actually really, really promising. So we're working very collaboratively now with the DHA and are part of these digital identity streams that are coming out of government and industry. Because to your point, we see it as a critical component of driving financial inclusion
well,
in
that's
South
good to
Africa.
hear.
And then the question on SMEs in South Africa. So I'll take an instant payments. So I'll take a very practical kind of chain of transactions example where, if I'm going to work and there's someone selling coffee on the side of the road and I can make an instant payment to them instead of making a card payment, just that one transaction of being able to have the money move from my account to their account at the same exact moment means that if you kind of compound that against a couple of other transactions that come through via instant payments that day, compared to them having to wait the next day for card, payments to clear into their account, if they ran out of milk or coffee beans that same day, they don't have to shut up business or ask for a loan to buy beans and milk. They can just take the money that's in their account from those instant payments, replenish their milk and their coffee beans, and keep selling. And that's just one micro example of, and in one dimension of the opportunity. If you compound that across the whole economy, that's how we get to some of the projections that show things like almost a 0.7% contribution to GDP from true rollout of instant payments in South Africa over the next 2 to 3 years. So you can take that micro example and scale it, and that's how much opportunity is sitting there.
Exactly. And that's why this is so exciting and so fantastic to see all of this movement fleshed out a little bit further in the budget. Just lastly, obviously, the budget also points to the implementation of the activity-based model as well in the second half of this year, which is important. But, for PEM, what are the key milestones we should watch between now and 2030? And what would you say is the single biggest risk to PEM's success? Is it technical risk? Is it governance? Is it stakeholder incentives that we don't get the banks to grasp and move fast enough? What is it?
So I think one of the key milestones, I think we were discussing it earlier, is the entry of non-bank participants into this national payments ecosystem to provide instant payments more directly. And I think that's a huge opportunity to drive natural competition in this space so that you start seeing those vested interests having to shift and kind of move with the times and kind of keep up with offering, best in class, lowest cost payment services to their retail customer base, to their business, a small business base, etc. So I think that kind of competition vector is going to be extremely valuable. There's a lot of policy that's coming out around that now, and they're trying to get the balance right between, upholding the rigor of our regulated payment system with the ease of access for fintech. So that's going to be an opportunity and a challenge that I think is a key one to watch. And then the other one is delivering on this interoperability promise. And the main friction and challenge to that is a combination, obviously, of the kind of inertia of the traditional banks not wanting to necessarily move away from the legacy income streams, but also around making it the parameters of operating PayShap clear, consistent, and aligned with a banking system that is really good at what they do in offering products to their customers. So getting the guidelines and the governance right to set the standards without being overly prescriptive, and in consulting and collaborating with industry to deliver the best result, but keeping firm and keeping us moving is going to be the opportunity and the challenge. And I think the early signs from our engagement with the regulator and their kind of role into Pay Inc. is they are extremely collaborative and they're extremely open to engagement, and they consider all of those inputs when they promulgate any kind of actions on the back of that.
Absolutely. And it was when we saw the launch formally of the Association of Payment Providers. I think President Lincoln Marley, who I had on the podcast last year, was a very passionate CEO of Lusaka Technologies, that the non-bank payment players need a voice. They need a voice at the table to ensure that the country's new national payment system legislation supports fair access and competition, and we get to see the benefits that all of this can deliver. And it really looks like the political will is there through the budget and what we've been seeing. Marin Cundall, been great having you on the Monocle Banking Podcast. Good luck in building out the bank of the future that can better serve South Africans of all shapes, hues and sizes. Thanks for your time.